Here we are with RKT, Rocket Companies Inc. And before we jump into this chart, I want to welcome all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. Let's jump into this chart and see what's going on. So, Rocket Companies has been in an upward trend, and it then started moving sideways from the recovery down here, hitting that low of 1940 and 1935 range. And then from that point forward, way down here, it started to work its way up and reach newer highs. And now we are in a slight bearish run. So it seems bearish due to the 50-day moving average, but we are above where it once was. And the question is, could the bulls continue this momentum, even though this slight profit taking or fear or uncertainty has kicked in here in the last couple of days, in the last 2 days actually, because it was actually falling and then ran up. It was leveled off sideways, and then now it's actually dipping, but it leveled off today. So the question is, could the bulls reappear and bring this back up? But we are in bearish territory. That's something to keep in mind and pay very close attention to as well as this plays out. But the support was broken through. It reached a new low way down here at 21.91, and then it actually leveled off, and then the last couple hours of the day it reached a new high again of these last couple of candlesticks. But let's go ahead and put this where it goes now, our new support, and then let's look at our new resistance. This resistance was the highest point reached in the day towards the end of the day, but this was a very bearish run, strong bearish candlestick here. This was immense. It dropped it literally from the highs here of 22.90 all the way down to 22.15, almost a whole dollar it dropped. But let's go ahead and see here where this is at for tomorrow. So 22.27 is the closing price, and the bulls need to break through the highest point they reached in that 30-minute frame, and that's this resistance level of 22.39. Now, if the bulls break through 22.39, that does not signify that they've gained control. This just gives us as investors a sense of direction where this could be heading. And if the bulls turn it into a support, they can break away from it and hit newer highs. What lets us know that the bulls have gained control is up here at the 50-day moving average of 22.87. I'd write that down. That lets us know that currently we're in bearish territory if we're below it, and you'll be in bullish territory if we're above it. As of right now, the bears are gaining control, they're maintaining the control, and the bulls need a break through 22.87 to start to work their way up to newer highs and get back into bullish territory and gain leverage. But 22.39 does not signify that the bulls have gained control. This is just an indicator to let us know where this is heading and that the bulls could be on their way to their goal to break through the 50-day moving average, and they're starting to work their way up. Now, on the other hand, we have our support. And this support level is important because it's one of the lowest points reached in this bearish run and a downward trend. And it's also where it's getting closer to these numbers that we were at before. So let's go ahead and zoom in. And these numbers before were the numbers before this run. So it's so important to keep in mind and pay very close attention to how the stock reacts if it breaks through it or gets closer to it, because we're already in bearish territory, and that's just more confirmation that we're getting closer to newer lows and getting further away from the 50-day moving average in a downward direction. So I want to emphasize to all investors that our support level 21.91 is so important to keep in mind and pay very close attention to how this stock is reacting in this area and how quickly is it moving to newer lows. Are the bears tearing this one down and reaching newer lows fairly quickly and breaking through support levels, or are the bulls trying to level this off and reappear and bring this up like they did here? This is a nice leveling off where the bulls have appeared and they're trying to stop it from hitting newer lows, but you can see here when it's dominated by the bears and they brought it even down to the point that finally the bulls appeared and leveled it off. So those are the things to pay very close attention to as it gets closer to this support level and how quickly does it break through it, because the further it gets from 50-day moving average in a downward direction, the deeper we're getting into bearish territory and the more control they're going to start to get from this chart. Pay close attention to how it's reacting. Put your 5-minute, 1-minute, 15-minute charts and look at the inflow and the outflow and see who's dominating these charts. I hope that with these cues, you guys will be well equipped for tomorrow's trading day. And as always, if you're a first-time viewer or investor, and even to my subscribers, click on the bell for turning on all notifications. All my subscribers and first-time viewers that are inclined to subscribe, click on the bell to turn on all notifications and not miss a single video that I post. To all the first-time viewers that are feeling inclined or encouraged to subscribe, please do so. You're more than welcome to. I highly encourage it so that you don't miss any of my videos. And at the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.